My name is Janet Sheriff. I'm the CEO of Golden Predator. Also joining me today is Jim Hesketh, the CEO of Viva Gold, and we'll be discussing our recently announced arrangement to combine our businesses and our projects. But I want to go back first to something that you were talking about, Greg, and I'm going to hope people can see this. Can you see that, Greg? This is a 1 ounce. It's not showing. This is a 1 ounce gold coin. And it's from the Yukon Mint. We produced it. We made the coins. And I want to reference Chris Powell from GATA right now. At all times, this is money. And this is money when your internet's down. This is money when they stop printing money or they print too much money. And this is money when your power goes out. And this is what we are doing. We are after gold. So the combination of these businesses is about more of the gold. I'll walk through the presentation. I'll start the first part and then I'll pass it over to Jim. And again, it's about this. Disclaimer, please do your own due diligence. Don't believe a word I say. It's always my joke. So, but do your own due diligence. 2 days ago, we announced an arrangement agreement between Golden Predator and Viva Gold, and it's proposed to merge our Nevada and our Yukon assets with a management of proven team builders. So why are we doing this? We are doing this to combine a strong management team led by Jim Hesketh as CEO, Bill Sheriff as the executive chairman, and Mike Myslowski as the chief operating officer. Bringing this proven mine building team together and two advanced staged assets gives us a very singular focus on heap leach mining and combines two great jurisdictions. Having two jurisdictions gives us diversification and reduces jurisdictional risk and brings together some cost synergies through consolidation. We have a healthy treasury, and I'll walk through that. We're committed to environmental stewardship and First Nation relations, and we're very strong about that at Golden Predator. The arrangement will see the exchange of shares for Golden Predator shares to Viva, and a board that will consist of 4 Golden Predator seats and 3 Viva Gold seats, again, with Bill Sheriff and Jim on the board together. So really, I've walked through this, and we're going to go at a very high level today because there's a lot of information to cover, and I want to give Jim some time to talk about the project that's coming in from Viva Gold. Brewery Creek is the asset that most people know from Golden Predator. We do also have Gold Dome, Grew Creek, and a project with a resource on it called Marg. We won't have time to discuss that today, so we'll stick to the 2 key assets that are advanced stage. Brewery Creek is a past producing asset that we've spoken about several times here. There's a bankable feasibility study underway right now we're nearing completion now that we incorporated some drilling from the fall. With significant infrastructure on site, it allows for a timely restart. And the photo that you see behind me is from Brewery Creek when it was in production. Road accessible, a number of infrastructure still left on site from when it operated. The Tonopah Gold Project is an advanced stage project in a great jurisdiction, Nevada, that's well known to everybody. Low cap, open pit heap leach with the production of about 40 to 50,000 ounces a year. A PEA has been completed, and I'll leave the rest of that to Jim to speak to. The Proforma capital structure will be about 235 million shares. I should note that the warrants and options will all be converted into Golden Predator instruments at the conversion rate of 1.6, as with the transaction, and the terms of the warrants and options will all remain the same. We have a number of assets in Golden Predator that will be part of this. We have about $7 million in cash and marketable securities. We have the Yukon Mint. The marketable securities include Seabridge Gold and C2C stock, which is another company that Greg covers. We will be spinning out before the close about 8.6 million shares of C2C stock to the Golden Predator shareholders. And we also own 20% of Group 11, which came out of our plant producing this in the Yukon. A strong board of directors led by Bill Sheriff and Jim. You see a number of familiar faces from both of the companies, and they will lead the management team that's as discussed. Golden Predator has been very committed to environmental, social, and governance principles. And to that end, we have negotiated an exploration agreement with the Kaska Nation that covers several of our other properties other than Brewery Creek. And we also have a socioeconomic accord with the Tonopah for the Brewery Creek project. It's just a shot of Brewery Creek when it was in operation, but I'm just going to walk through a video very quickly to discuss this. This is a close-up of the project, about 45-minute drive from Dawson City. The area covered in beige in the center of the project is the area covered by the mining license and the water license. And the video I'm going to take you through, and you may have seen before, but it's important because I want to talk about the bankable feasibility study that's coming and the drill results that we recently announced that are incorporated into that. So I'm going to take you as a flyover from the beige over the beige area, starting from west and going east. So here you see the project. This is called the Reserve Trend, and this is the area that's covered by the mining license and the water license. You see the access road in the foreground. The heap leach pad is in purple, and the 75-person camp to the left. You can still see the heap leach, the ponds in the foreground in front of the heap leach pad. A number of different pits and resources along an 8-kilometer trend. We've been working on the bankable feasibility study to incorporate everything from Canadian to Lucky. The work that we did up until this past drill program in the fall of last year incorporated everything into one large pit shell, which we refer to as the keg. We did some drilling in the fall, and that is being incorporated into the bankable feasibility study. That is between Golden and Lucky. Visually, it looks like we've achieved our goal, and the results have shown that recently announced about a month ago. It's important because Lucky is the highest grade pit on the property or in the licensed area. So incorporating Lucky into the bankable feasibility study work now. I've had a lot of questions about how long it takes to complete a feasibility study and when will it come out. With the drilling done, sometimes there's false expectations that it would be an immediate, but it does take time to run the metallurgical tests on the drill results. So those generally take for full results about 90 days, but we have a good idea what's coming after about 60. With those metallurgical results, we're able to complete the bankable feasibility study, and that will come out shortly. We see the addition of the Tonopah project to this as really putting more ounces in the ground, ounces in the company, and provides a great opportunity to almost create a little bit of a horse race between two projects to see which can get through permitting and in production first. Just now you see back looking west on the reserve trend, some very nice gentle sloping landscape with additional infrastructure left on site. I'm going to give Jim the rest of the time because I'm talking too much and let him walk through the Tonopah project. Jim, do you want to take it away?
Sure. Thank you, Janet. I'm Jim Hesketh, President and CEO of Viva Gold Corp. It's a pleasure to be here this afternoon. We view this combination as a definite opportunity to put several gold mines into production, probably either in series or parallel, depending on what the markets look like and what the timing looks like. I'm quite familiar with Brewery Creek project, dating back to my involvement with the original loans on that property back in the early 2000s. And moving forward here, the Tonopah project, we acquired this project in 2017 from the bankruptcy estate of Midway Gold. Former explorers on the project include Corp Mining, Rio Agam, Kennecott, Newmont, and Midway. And as part of our acquisition, we were able to restructure what was a very onerous index royalty. The royalty originally was about 7% NSR. And we equitized that. We gave the royalty holders a big chunk of the original holding company that created Viva Gold. And we're able to reduce that royalty to a 2% NSR with a 1% buyout option. What that allowed us to do was to look at this project in a way that Midway Gold couldn't. We were able to drop the cutoff grades and look at this as an open pit heap leach. Now, one of the benefits of all these predecessors, who are probably benefiting right now from $20 to $30 million spent previously, it always pays to be the second or third owner of a property. And we have over 90,000 meters of drilling in our database, as well as extensive geophysical work, technical work, environmental studies, and we'll talk about that a little more. Let's advance. So we own 100% of this project. It's on the Walker Lane Trend. We're about 30 miles south of the Kinross Round Mountain Mine. The deposit itself remains open for extension along trend. And we've completed a positive PEA using $1,400 gold as our base case, quite conservative. The key item that distinguishes this property from many others is the presence of a high-grade starter pit. It's quite near surface. We'll cover this on the next slide. But this high-grade starter pit drives payback. And the project has the potential for 2-year sort of paybacks on the capital. That means low capital risk. A key item in the economics of any mine. And what we're looking at is a low open pit heap leach. This will be a crush leach that produces about 40 to 50,000 ounces of gold a year. To put that in context, that's an $80 to $90 million a year business at today's gold prices. So what we're talking about here is a true business concept. The pit has very strong leverage to gold price. When you increase the price from $1,400 to $1,500, you see a 50% increase in contained gold ounces. So again, one of the things you need to look at is when gold price shoots up, do we have leverage? The answer is definitely yes. The other key item on this project, paved road access. We have a power line and a water pipeline, commercial water pipeline that actually crosses our property. So next slide. Resources right now, the pit constrained resource is measured and indicated of about 326,000 ounces, inferred of 181,000 ounces. Of the ounces contained in the pit, at a 1 gram cutoff, about 42% of those ounces exceed that cutoff grade. So what we have is some very high grade cores in this project. Let's go to the next slide. As I discussed, the starter pit, it's a key item. We've got the initial pit on this would be about 2.7 million tons at 1.37 gold. And the mineralization starts 10 meters below the surface. This is, for a heap leach, this is high grade and very shallow, easy access. That starter pit drives the payback. And then the ultimate $1,600 pit that we're showing here on the extents, it's bounded by just plain a lack of drilling. So that's the key. The PEA, the indication on the $1,400 case was about a 25% IRR with a 2.9-year payback and a discount rate of 5%, a 44% rate of return. That's equivalent. Go back, Janet. That's equivalent to the capital of both of our companies put together. And that's on the one project. So with Tonopah and Brewery Creek, one mine or the other pays for the other mine, and you get the second mine essentially comes along for the ride. So when you look at the sensitivities on that base case at today's price range is $1,700 to $2,000, the paybacks here, 2 years going down to 1.5 years. So robust economics. Let's move ahead. I mentioned the pipeline, the power lines, they all cross. This road in the background goes to the Round Mountain mine. We've got equipment supply depots, Round Mountain, half-hour drive, Las Vegas, 3.5-hour drive. We have an existing environmental assessment on the project, cultural resource study. That's currently being updated to take this into feasibility study a little later this year. Let's move on. So really, the definitive agreement between our two companies creates a proven mine building team, 2 advanced stage assets. We've increased the in-house expertise for project advancement. We have the potential for significant increases in the heap leachable gold resource. We've got an enhanced balance sheet, cash in the bank and through securities, and cost synergies through the combinations of management, jurisdictional diversification, creating risk mitigation, and a commitment to environmental stewardship. And at the end of the day, the directors of Viva Gold and Golden Predator both voted in favor of this transaction. We'll be producing the information circular, which will be shipped out within the next couple of weeks. There's a shareholder vote coming up.